Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, the markets finally had a beautiful correction yesterday. In fact, we could see the market actually initially rallying up and went close to 18,775, almost close to 18,800. And from there, a big fall all the way to 18,600 levels, and then from there closing. So it was a negative closing. The market did fall. If you see from 18,775 to 18,600, that's almost 175 points fall that we could see intraday yesterday in the market. Naturally, the volatility was at this peak, and who would have expected that in such a bullish week the market would be falling such big. So of course we had some positions open which went on really well. In fact, I'm closing this week with again about more than 1% of profit. So that was something really good that we could do as trading. Apart from that, if you look at stocks, we did book some partial profits in some stocks, which is actually done well. So that was good, and that we could do before the market actually fell. Now that was not a perfect timing. I would say it was just pure luck, because nobody can ever predict the market. But then, of course, things were looking good. We had some decent profit, so it was time for booking some profit. But then, this is exactly what everybody would think, isn't it? So everybody, most of the people who had actually invested about a few months back should be sitting with some amazing profit there. So would also be a fear, because 18,650 yesterday also we discussed was an important resistance which is broken now. Resistance is broken on the higher side. And in fact, when the market went almost close to 18,800, which has been very close to its all-time high, then everybody would have a feeling that will the market fall, or will this rise sustain. So people who have some decent profit in the kitty would actually think of booking some partial profit, and that's exactly probably what happened yesterday, because institutionals were not big sellers yesterday. In fact, the DIAs have sold, but it was just for about 400 crores. But the FIAs have still bought yesterday also for almost 200 crores. But then it does not account for almost this 175 point fall. So who were the culprits? Probably the retailers. So this is what the situation is right now, because a small fear in the market, the retailers have become so big in India that a small fear in the market can actually induce a big selling even by the retailers. So that could actually take the market down or up against the institutions. So that is also something which was seen yesterday. Now just imagine if just retailers could take the market down so much yesterday. If one of the institutional joins them, what would happen? The fall or rise would be even much more bigger. So that means gone are those days when Indian market used to be a more sane market. So it's now a new version which is more of insane, insanity in the market right now. So that's something that we can of course see with the kind of huge volatility that's coming in. So of course we had taken some very safe trades. In spite of that, we got into trouble on Wednesday, but then Thursday we could come out with decent profits. So that's sticking on to some strategies and planning which actually helped us do that. So that's something about investment, because investment always requires a proper strategy and planning and understanding of what we are doing and why. So that's something which many people lack when investing in the stock market, and naturally burn their fingers. So I would say this is why we have beautiful portfolios available with us, which is managed by SEBI registered fund managers who are one of the best in the country, who do everything for you, where you can just just sit quiet and enjoy your money, seeing your money grow. So that is something which can be done. But then of course probably I should be coming out with some videos separately for that would help you understand. But otherwise, without proper guidance and education, stock market is not a place to be sitting in, because you could not only burn your fingers. I've seen a lot of people even losing their entire capital and investments. So that's something which is not good. But then yes, let's go ahead and understand what happened in the market. So yesterday we could see Bank Nifty actually rallying up. We had the monetary policy meeting, and as the RBI governor came out at 10 a.m. live and started talking about it, that actually induced a lot of volatility. At one point of time, at one dialogue, it would go up, and next dialogue, it would come down. And this was happening multiple times, if you see, at around 10 a.m. in the morning yesterday. And after some time, it actually rallied up, and Bank Nifty was breaking its all-time high for a very brief moment, but then from there came the big fall. There was nothing really negative in RBI governor's meeting. In fact, they've only said that they are looking at accommodative stance as of now, and things are looking good as far as Indian GDP is concerned, or even inflation is concerned, or even PMI, the Purchase Managers Index. So all of this looking good. They don't see a reason to rise rise interest rates anymore. But still, it was not. I would say it is not induced by the monetary policy, but it was just the profit booking that has kicked in. Now, what will happen next is the big question. So before we discuss that, let us understand what happened in the global markets. The European markets were kind of flat, and from there we could see the US markets. US market initially was flat and went slightly negative, but from there, this morning when I woke up, I found that US markets have actually done really well. So Dow has gone up really well. In fact, it's on its highest level in 2023. S&P 500 is on its highest level at 2023. Nasdaq also is already at a similar level, and all of them have actually closed in the green yesterday. So that was good. In fact, US markets have been on a slight consolidation for some time. Looks like it has kind of rallied up just before monetary policy meeting happening in the US next week. So US markets would continue to be cautious until next week. Though expectation is that the Federal Reserve in the US will not be going for any more rate hike as of now. But then, of course, the market would continue to be cautious until the Federal Reserve meeting outcome comes out next week. So, but then, of course, the green was seen in the market. So naturally, the SDX Nifty is indicating a slightly gap up opening today. So we might see a gap up opening, which is good. But then the important question is, if you look at the market, whether yesterday's low will be broken. So it's important to see the market today, because see, Friday on the end, generally being a weekend, people would square off their positions, and that could lead to some sell-off by end of the day. But then this is probably the last Friday, which could be more saner at this point of time. The reason is simple. From next week, I think the Bank Nifty expiry is going to be on Friday. If that happens, Tuesday is Fin Nifty expiry, Thursday would be Nifty expiry, and Friday would be Bank Nifty expiry, making all these 3 days really volatile. So that means next week onwards, if Bank Nifty is expiring on Friday, so probably this is the last Friday in the history of stock market where we see a weekend enthusiasm. So that's something that could drive a lot of interest on Bank Nifty trading. So next week onwards, we could see a lot of or high volatility on Fridays. So that's one thing to be on focus. Apart from that, as on today, I would say 18,500 to 450 level is an important level on the downside, which if that is broken can lead to more bearishness in the market. So let us see how the market actually reacts today to take a view for the next week. So I will be discussing about the view for the next week on Sunday in the Market Pulse video. So more details on that on Sunday, and also we could discuss on what happened in the week. So those who don't know, Market Pulse is a video that happens weekly on Sunday at 7 p.m. sharp, where we discuss about what happened in the market and what could be expected out of the market. So I will be discussing the important levels during that time. And apart from that, if you look at today, the focus would be on TechM and IT sector, because yesterday IT sector has not done well. So probably the rally which was pending in IT sector probably could be seen today, and Nasdaq also has gone up and supporting the IT sector. So that could probably mean it could be a day of IT. So IT would be a sector to watch today. Apart from that, if you look at the other markets, banking sector to be watched, because will it break down from this level once it's reached close to its all-time high is a big question. So if Bank Nifty also falls around 43,000 range, then that could be a negative side. So that's something which can be expected for today. Let's see how the market moves. So more details. Okay, so more details when we meet on Sunday. Goodbye. Have a great weekend. But before we leave, of course, do remember to press the like button if you love the content we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. And if you have still not subscribed to our channel, of course, it's high time we subscribe. Goodbye.